You know the deal. Wednesday, Matt Stranix, 5 Minute Finance. Luke, today we're getting away from the fancy investment discussions and going back to the basics, going back to the fundamentals, the foundation of every financial plan, life insurance.
Well, if that didn't just make half of our at-home audience immediately lose interest, I have no idea what will.
Yes, we joke, but it's because it isn't exactly the most exciting topic, but it's certainly a major component of sound financial planning. And because it isn't the most exciting or generally feel like a priority, it is a common gap in many family financial plans. So, Luke, the more we talk to prospective clients, the more we see it. People just don't know how much life insurance they need. It's not a fun dinner conversation. So it's something that primarily goes untalked about.
It's typically one of those things we intend to get to and just haven't yet. So, Matt, you're exactly right. I mean, the loss of a loved one can be absolutely devastating for a family. Making sure there is enough life insurance to avoid financial ruin is a key piece of planning, but then also ensuring that beyond avoiding financial ruin, we have also kept the family on the intended path to achieve the goals and desired lifestyle. So getting to the actual coverage amount seems to be a little like a religious mystery to some. So I'd like to take a moment and walk us through an example today.
Great. Let's imagine there is a mom and a dad, both age 35, married, and 3-year-old twins. So mom works full time, makes $180,000 a year. Dad stays home, primarily takes care of the children. But let's say he does some small consulting work here and there, $20,000 a year. Total outstanding debt, call it 300,000.
Yes, the American dream, 2 children, white picket fence. I mean, first things first, we need to make sure that they have the freedom and flexibility to pay off the debt should they choose. So our starting point is at least 300,000 for both of them. Next, through conversation with the clients, we found out they also want the ability to replace mom's income if she were died. This is where it gets a little tricky. We need to find the future value of all of mom's income from now until retirement. Taking into account a 2.5% inflationary adjustment, this gets us to a future value of 7.9 million. We then need to discount that back to today's dollars. We'll use a 5% discount rate over 30 years, and that gets us to a rounded present value of to replace her income from now till retirement of $1.8 million. And so that's the life insurance needed today for mom, assuming the proceeds would be able to return 5% per year.
Okay, so I'm assuming that because mom earns much more income than dad, she'll have a much higher death benefit need.
Traditional methodology might suggest that. I mean, however, let me ask you this. If it was dad that died, who would take care of the children?
All right, well, I'm sure mom would want to take a few months off at minimum to be with the children full time. Then she would either need to take a job that allows her to be home more often, so that would likely reduce her income, or she would need to send the children to daycare, hire a nanny, make some other arrangements.
All right. Meaning if dad dies, there's going to be a much larger need than just replacing his $20,000 annual income. So replacing mom's full income again in this scenario would be the prudent strategy. But let's assume mom believes she'd be able to find a job and would want to continue working that allows her to care for the children and still make $80,000 per year. Now, the income loss if dad dies is the $20,000 from dad and $100,000 from mom. So a total of $120,000 per year. If we use the same methodology from above, we get an income replacement need of life insurance for dad of $1.2 million.
Now, don't forget to add on the base of $300,000 to cover the outstanding debts.
Exactly. So if these were the only variables we were taking into consideration, we would suggest that mom have no less than $2.1 million of life insurance death benefit and dad have no less than $1.5 million of life insurance death benefit. Other common variables considered include final expenses, anticipated future debts, desire for educational funding, likelihood of expanding the family, just to list a few that weren't considered here. We do not, however, have the time to get into the other questions such as coverage period, what type of life insurance to choose, or even the process of obtaining the coverage. So we will have to continue this conversation in future episodes.
Luke, thanks for helping to bring clarity to something that many people struggle to wrap their heads around. Episode 7 of 5 Minute Finance is in the books. Be sure to tune in on the first and third Wednesday of every month for new content. Be sure to like, comment, and share to help spread the financial education. Thanks, everybody.